Jayendra Bhai and Alok sir for taking the time out, and all to the participants who have connected to the call. So in the last couple of months, there has been complete madness in this sector, and it is good to see that some NBFCs have been able to hold their ground and really differentiate themselves. And Arman has tried to be in that camp. So they have recently reached the quarterly run rate of 12 crore. So we'll give the line to Jayendra Bhai to take us through what has been and what has happened in the last 6 months. So over to you, sir.
Thanks, Bhavik. Good evening, everyone. Thank you all for joining in and taking time out for our results and discussion for the half year ended FY2020. I am joined on this call by Vivek. Amit Bhai is also here, and Alok, of course, is here. We have issued an investor presentation for the past quarter. Hopefully, everyone has had a chance to review it. If not, it is available on the stock exchanges and the company website as well. Despite bad weather conditions, both figuratively and literally, as there are strong monsoon, which caused a lot of disruption in many of the areas we operate. I think you will agree that our results for the half year have been quite pleasing. This is our first year of Indian accounting standard is what I meant. This is our first Ind AS reporting, and numbers for the corresponding period in the previous have also been reported accordingly. I will begin by giving a brief overview of the consolidated numbers for the first half of FY20 and then touch upon the performance of each of our three segments. As you can see from the results, our performance has been quite satisfactory for the first half of this year, and considering the prevailing economic slowdown in the rural sector, too much rain in many parts and liquidity squeeze faced by the NBFC sector in general for the last 4 quarters now makes our results a positive outlier in the industry. Our consolidated assets under management grew by 46% year over the year to reach 753 crore. Total disbursement in H1 of FY20 grew by 19% year on year to rupees 423 crore. The slower disbursement growth has been largely deliberate, as we considered it to be prudent to tread carefully given the macroeconomic conditions in the market. Most of you will also be aware of the strong sales pressure affecting the two-wheeler sales during the past year, which also led to a decline in our urban two-wheeler disbursement. Consolidated gross total income grew at a faster rate than advances, by 70% to be precise, to rupees 103 crore, driven by higher blended yields. Our efforts on improving our operating efficiency paid off, as our cost-to-income ratio declined by nearly 640 basis points to 40.5%. That, combined with positive tax relief announced by the government, enabled us to post a 100% year-on-year increase in net profit, which stood at 24 crore. This is more than what we achieved in the whole of last year. I'll repeat this. This is more than what we have achieved in the whole of last year, what we have achieved in last 6 months. Our consolidated debt equity ratio stood at approximately 4.75:1, and we have sufficient capital in place for our growth in the near term. Asset quality continued to remain robust and were steadily compared to last year, as our gross and NPAs stood at 1.2% and 0.6% respectively at the end of H1. Our return ratios, that is return on equity and return on AUM, return on asset under management improved significantly and stood at 35.8% and 6.7% respectively during H1. Furthermore, as a part of our FY20 expansion strategy, we launched 54 branches in the first half, including 14 new branches during the second quarter. Of the new branches launched, 44 are for MFIs, 9 are for MSME. Total branches stands at 223 located in 6 states, which includes 182 in microfinance, 34 in MSME, and 7 in two-wheeler. Our total employee strength has grown to over 1,800 as of today. Comparing the different segments, starting with microfinance, which is our largest division, continue to see robust traction with the loan book registering a growth of 57% year-on-year to reach at rupees 555 crore. During the first half, the total income grew at a much faster pace of 77%, majority driven by expansion in the net interest margin to 14.4% as against 13% in the previous year. Pre-provisioning operating profit grew by more than 100% to rupees 22 crore, up from 11 crore last year, as we benefited from positive operating leverage. The provisions came in higher at rupees 2.7 crore, primarily because of additional ECL provisioning. ECL meaning thereof expected credit loss provision of rupees 0.8 crore, largely due to the prevailing macro environment and impact floods in the same parts of Maharashtra and Gujarat. Despite this, profit after tax nearly doubled to reach rupees 14 crore, and our NPA remained well within the control at 0.8%. Post NPA ECL adjustment, the NPA is only 0.24%. This ECL provisioning on the AUM is 1.2%. Overall, the microfinance division accounts for 72% of the consolidated AUM and 60% of our profit. I'll repeat that. Overall, the microfinance division accounts for 72% of our consolidated asset under management and 60% of our profit. Moving to the MSME segment, which essentially includes individual micro enterprise loan to the rural segment, is our second largest division and accounts for 16% of our asset under management. We started this division as a pilot in 2017 and have come a long way since. During the first half of this year, AUM from this division has grown by 70%, from 74 crore to 125 crore. In MSME, we have grown from 74 crore to 125 crore. We operate in 3 states currently, which includes an expansion in Maharashtra with 4 new branches in the second quarter. We have an active client base of about 35,000 customers. Income from operations in MSME have more than doubled to rupees 20 crore in H1, as against 9 crore achieved in the previous year. From previous year of 9 crore to 20 crore this year. Lastly, our oldest division, which is two-wheeler financing division, has been impacted by, as most of you are well aware, by the severe slowdown in the domestic two-wheeler sales, which has been a decline of almost 20% in the first half of this year vis-a-vis last year. Our AUM in this division showed a marginal increase and stood at 96 crore compared to 89 crores in H1 of last year. Urban two-wheeler portfolio has been stable, which we have added rupees 7 crore of rural two-wheeler portfolio. Income from operations in two-wheeler segment grew by 17% to rupees 12.7 crore in H1 of FY20, led by expansion in yields. Furthermore, we commenced a pilot to start rural two-wheeler financing towards the end of last fiscal. This is essentially based on the hybrid of our microfinance and MSME business model. So far, the asset quality and the margins have been encouraging, but growth is slow here given the current environment. But we hope this pilot will prove to be a new avenue of growth for the two-wheeler division in the future. Now, give you the update on the ongoing liquidity crisis in the NBFC sector. I am pleased to report that given our naturally positive ALM and our strong past performance track record, we have been able to raise adequate funds to finance our ongoing operations without any hiccups. Although at a marginally higher rate, the rates for the new funds raised in the last 2 months are seeing a gradual decline. To further minimize the impact, we have focused on and been successful to an extent in diversifying our sources of debt financing. Financing from PSU banks have also opened up in the third quarter. As I mentioned earlier, for a company of our size, we are a strong outlier in the industry as far as our ability to raise debt funds. We have maintained sufficient cash reserves for 2 months of operations, which has resulted in a negative carry cost of about 1.5 crores during H1. We will continue maintaining our liquidity policy at least until the end of the fiscal year and re-evaluate post the year end. Overall, to conclude, we are sufficiently capitalized and remain on track to achieve strong growth in the second half of this year as well. Having said that, however, our first priority as always will be on existing prudence and maintaining the quality of our book. One of our unofficial mottos has always been that it is easy to give money, getting it back is the trick. With this, I would request the operator to open the floor for questions. Thank you so much.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Pallavi Deshpande from Samiksha Capital. Please go ahead.
Yes, congratulations on an excellent set of numbers in this tough environment. Just wanted to understand what would be the amount of securitization done, if you could have numbers on that, and how much was the gain on this booked in the interest income?
So cumulatively, I think we have about 100 crores on the book. As far as Vivek, you want to get
what we've done primarily is multi-originator transactions, which are PTC transactions, and these are under the NDS are completely on-book items. Right. So they kind of take the texture and color of regular borrowing only.
Right.
And to kind of further put into that, there are certain rules under NDS about what constitutes as a true sale, and that has to do with whether it has recourse or doesn't have recourse. So lot of the PTC we had to re-recognize it back into the balance sheet after Ind AS implementation. Right. So there are actually transaction we have which without recourse, which is I think
is also on the recourse. So overall, all the transactions are
on the balance sheet itself.
Right. And so, but I got that. I saw that on the balance sheet, the de-recognized number. So on the interest income, does it include any gains, upfronted gains due to this?
No, it doesn't include any upfronted gains.
Okay. Right. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Avinash Tanawde from Dalal & Broacha Portfolio Managers. Please go ahead.
Thank you for the opportunity, sir, and congratulations for a good set of numbers.
Thank you.
So I just want to, first my question is about MSME portfolios. So overall, the industry, if you look at in the banking and even NBFCs, they are somewhere down the line avoiding the MSME, but still we are growing our business in MSME. So could you just explain something about your MSME portfolio and why we are more bullish about MSME portfolio?
So, I think calling our division MSME has been a bit of a misnomer to a certain extent. Because, when you talk about doing microfinance, that comes in probably a single flavor model, the group kind of a model. When you talk about MSMEs, that comes in all kinds of flavors. So what we are doing is basically, it's a different kind of what MSME is, what most people would assume when they hear the term MSME. Ours is completely rural-focused, individual loans, and it's a doorstep delivery and a doorstep collection. So, it's basically kind of taking the best parts of microfinance and adding a level of underwriting which is not possible in the microfinance side. And that's how we originate the loans. But the ticket sizes are between 50,000 and 1,50,000. With an average of somewhere in between 70 and 75K right now. And our focus is mostly on the rural to reach up a couple of steps above the pyramid, So microfinance, you are covering the bottom of the pyramid. In MSME, we hope to reach a couple of steps higher than that. People who are still not in the informal banking segment, but they're a little bit more mature in their business cycles to require a little bit higher ticket loans, but they cannot access it from the mainstream as of yet.
Could you give some examples? What kind of customers you have example?
It would be larger cattle dealers. It could be scrap dealers. It could be larger kiranas.
Small machines.
Small machines.
Okay.
Tire shops. It could be, the small highway stores that you run into passing those rural, something along those lines.
Other than that, if you look at in terms of the yields that we are generating from these businesses, is between 30 to 35%, right?
The yields are, yes. So our all-in rates would go as high as about 34 and a low end of about 30.
So why this customer is not going to the microfinance and coming to us? Because somewhere down the line, some microfinance companies like Bandhan and everyone is giving loan up to 1 lakh or more, even 2 lakh or 3 lakh. So why they are coming to us rather than going for them? Because if I remember correctly, then 18% to 19% yields their Bandhan Bank is providing. So why 35% giving to us?
I mean, that's a good question which doesn't have See, I can ask the same thing, that why is somebody going to Bandhan at 18 or 19% when they can go to SBI for 12%, right? Or 14%, or they can go to Japan for 4%. It's kind of, it has to do with my service model, number one. Okay. So with a lot of the people, they don't provide the doorstep collections. I provide doorstep collections in cash, which a lot of people appreciate, because there might not be bank branches in that area where they have to go and deposit the money on a month-to-month basis. There are other factors as well, like for example, I provide a very quick turnaround. I get down to the ground level and try to assess their cash flow. Okay. And, if we are not comfortable with their cash flows, then we reject the customer as well. And that's hard to estimate for you need some level of local knowledge and some level of experience with the different occupations. But if they could go to SBI, the other fact is also that our loans are unsecured. When you're talking about a 4-5 lakh rupee loan, in MSME, very few people are doing it on an unsecured basis. It's mostly some level of LAP loan or something like that. So that also has not only a higher cost, but a higher hassle and a higher turnaround time. And frankly speaking, at the micro level, when you're talking about loans of this size, our customers are not very price sensitive. For us, if you're talking about a large loan in crores, even a few basis points would make a difference, right? When you're talking about a 70,000 rupee loan, yes, 5-6% will make a difference in the installment, but by maybe $100, 200 rupees, something of that sort. So a lot of people don't care about that as long as they get it in time and in the least amount of hassle as possible.
And when you talk about our microfinance business, in MSME business, which are the areas we are catering? Which are the three major states we are catering MSME business, right? Which are the
primarily? So we just started this in 2017 with a pilot, as Jayendra Bhai said. We started it primarily in Gujarat, which is the majority of our portfolio. Okay. Around last year, mid to end of last year, we went into MP as well. Okay. And then in the last quarter, we went into Maharashtra. So Maharashtra is a negligible portfolio right now. Okay. And then we have about maybe a 20% portfolio in MP. Okay. And remaining portfolio is in Gujarat as of now. But that will change in about a year. That hopefully Gujarat will hopefully go down to about 40-50% by the next year.
So did we add branches in MP and Maharashtra? So we can...
Yeah. So we added about 14 branches this year. Gujarat today we have 23 branches. Maharashtra we have 4 branches, and MP we have 7 branches. So MP and Maharashtra, most of them we opened it this year or within the last 6 to 9 months, basically.
And in Gujarat, in average one branch, what kind of loan portfolio we have?
It depends. A lot of them are new. Some of them can be as high as 10 to 12 crores. Others, the newer ones, could be less than 50 lakhs also. Okay. Average will be, I don't know.
4 crores right now.
30. It will be basically 125 crores divided by 34. So whatever that works out to be.
Okay. And what kind of loan growth we are looking at in portfolio level?
So I'll take the last question. 1 second. I'll take the last question. But go ahead, please.
What kind of loan portfolio we are looking at in terms of portfolio level and in MSME business?
We have not released those figures, the projection figures.
No guidance.
We have not given that guidance, but our 2 cents are that, in the long run, as microfinance becomes more mature, this growth will be sort of a replacement in the sort of mid to long run. Okay. Because there is ample opportunities here. However, the rejection rate is high and you have to find that specific customer. So it's not possible, or it's not recommended also, and possibly not possible to grow as fast as most people are used to seeing in the microfinance sector, because you don't want to make sudden moves in this segment, as you said earlier on, and it's relatively new for us, so we are treading carefully.
Okay.
Thank you.
Okay, thank you, sir. That's it from my side.
Thank you. The next question is from the line of Ankit Gupta from Bamboo Capital. Please go ahead.
Yeah, thanks for the opportunity. Alok, if you can talk about how is the overall, microfinance market doing, given the kind of stress we are seeing in the economy and in general. So, your loan growth doesn't suggest any, slowdown or impact of, challenging economic scenario. So, how is the market shaping up, and do you think this the growth that we are seeing, or the kind of overall, at least the growth which is being suggesting that there is hardly any impact on the clients that we are serving? What is your view on that?
No, I mean, it's a fair point. At least in the last 6 months, there's been a lot of scary kind of talk around the macroeconomic conditions, especially in the rural segment. And to a certain extent, I've been expecting it to kind of deteriorate, since the last 6 months. I have not found that yet in the rural segment. During the monsoons, there was some level of disruption caused due to the monsoons. But overall, things are back stable again. And I have not noticed it, even though I'm a bit of a pessimist myself, so I have been expecting it, to be honest with you. But so far, we have not seen any deterioration marginal few basis points here and there every month, but nothing we have noticed in the asset quality. As far as our growth is concerned, we are already, I think I mentioned it, I can't remember if I mentioned it, but we have already kind of slowed down of where our projections were, about a year and a half ago or even 6 months ago. So, we are growing too fast. In fact, we have the capability of growing faster, but we are kind of holding ourselves back. And what does that mean? It doesn't mean, you mentioned microfinance. So in microfinance, what you have to do is, if you are doing a secured high-ticket loan, what you could do is increase the underwriting. In micro, that's not really. So what you have to do is you have to slow down in certain branches which you feel that might have, or certain districts which you might feel might have issues in the future, which is what we are doing in certain districts of Maharashtra, in South Gujarat, Eastern UP, those kinds of areas. We are trying to slow down the disbursements in few branches selectively. But otherwise, things are going well. It's business as usual. Okay. Because, another thing I wanted to talk to you, I wanted to ask you is regarding the competition that you are seeing in the geographies where you are operating. Because, we have been hearing about stress or the market getting overheated in eastern side of the country, particularly West Bengal, Assam, and other northeastern geographies. We have been hearing that, there has been a lot of overheating, there has been a lot of over-leveraging of borrowers, which is happening on that side. So how is the situation in the geographies like Maharashtra, MP, Gujarat, UP, and Uttarakhand, where we primarily operate on the microfinance side? Yeah, so I think these things kind of change around. You are correct. There has been a lot of negative news in Assam and in West Bengal and stuff about some overeating. Fortunately, we are not there, and we try to stay away from overheated areas. But, nothing prevents an area to become overheated after I move in. So, sure. But typically, we'll try to stay away from areas like that. As far as MP goes, right now, touch wood, it's one of my best performing states as far as asset quality goes. just moved into Rajasthan, so our portfolio is not very large, but we are, that's almost a zero NPA, which is typically what we target for and expect in the first year of operations in any new state that we go to.
True.
UP, there is some little bit of pressure in the eastern UP side. Maharashtra around Jalgaon area, there is a little bit of pressure, but otherwise things, there were some flood affected areas, some political issues going on, but I mean, that happens every year to an extent in different areas. It's not something that is beyond our expectation, and it's not something that we can control either. So far for us, it's not been bad at all. Give you my larger perspective on the industry. See, in the eastern side also, there is a bit of a regulatory arbitrage between the regulations surrounding NBFC MFIs. You have that two-lender rule and 1.25, which has kept things in checks and balance since the AP crisis. But the regulatory arbitrage is sort of created with the SFBs and banks. So there has been some level of efforts from the industry organizations to come out with something called a CRL, Code of Responsible Lending. And trying to get microfinance practitioners is kind of like a code of conduct that you won't over-leverage a customer and, you'll behave in certain manner which is not only protects the customer but protects the industry. So most people have signed it, few larger outliers in place without mentioning. But RBI taking notice of it. RBI, whether you call them proactive or reactive to a certain extent, after the Assam, I'm sure take notice and take steps surrounding this over-leveraging.
Okay. Would you have any data on, what will be the average borrowing of your customers? Like I'm including, borrowing from Arman and other NBFCs, NBFC MFIs, as well as SFBs. Will you have any data on that? What will be the average borrowing of our customers?
There is industry data available.
Sure.
So our average disbursement is somewhere around 26 to 27,000. So last quarter it was 26,000. So we are probably on the lower side of the disbursements. I think of all the microfinance customers in India, if I remember this data correctly, and don't quote me on this, but I think it's somewhere around 1.4 loans per active clients in the credit bureau data. And the average outstanding is somewhere between 20 and 25,000 per account.
Okay.
It takes me a long time to find it.
Sure. Okay. Sure. But will you have any data on how many exclusive customers we have, which banks or which have taken loan only with us and not from other NBFCs or SFBs?
First time loan taken are approximately 20%.
More than that, about 27%.
Were first time,
first time borrowers on the credit bureau at least.
Sure.
Different districts, but then average turns out to be about. And
this including the informal sector, by the way. So only if we get a hit.
Of course, informal data you will not have on any credit bureaus. Okay. And a few questions on MSME side. MSME side, how many of our MFI customers who have graduated from, let's say, 2-3 cycles to MSME customers?
So in our case, it's very little. So it's about less than 5% currently. But lot of, let's say, if we lend to a rejection, there's a very high, about a 70% rejection rate that we also have. But in lot of the cases, the women might have some microfinance loans either in the past or currently active loans. But when we pull the credit bureau data, we pull CIBIL reports and high mark reports for both the customer and the spouse. So the idea being that CIBIL will cover all the, housing loans or bank loans and stuff in case the high mark doesn't have the, and then high mark will micro loans, and we cover all of that in our, cash flow assessment and overall assessment of the customer. But I mean, we have such restrictions like the RBI, as in that if they have borrowed from one person or four people or whatever. For us, it's more about cash flows and what their installments are on a monthly basis.
Sure. Okay. And, one thing on the MSME side was the kind of, NPA levels you expect. It's a new business for us. It's an unseasoned business. We are just, 2-3 years into the segment, and our delinquency rate or our NPA rates are still lower than microfinance. Our ticket size are higher, our yields are higher, it's an unsecured loan. So where do you see the NPA settling in long term, let's say 1-2 years down the line, when we'll have the whole, the seasoning would have happened for the entire portfolio?
So, we've been doing MSME for 2 years now. Every quarter, the NPA levels do marginally go up. So currently it's at about 0.2%. And, telling that people would judge me saying that, that has to be some kind of, but I assure you it's, so it is, it is actually that quality has been beyond my own expectations as well. Even post facto in hindsight, I can try to extrapolate of why that is the case. But the product was expect about a 3% to 4% loan loss, not even the NPAs. It was designed percent ROA. So right now, if you MSME is our highest ROA right now because the loan losses are so low.
It's so low, and the names are higher in the segment,
But next, climbing on a quarter-on-quarter basis, but it's very marginal.
Sure. And on the bank funding and NBFC funding side, can you give a overall view how things are? Have the things improved? With banks becoming a bit more less cautious in lending to the sector as well as our company. Any a color on that would be helpful.
Things started improving in Q3. So we got new lines, SBI, OBC. Earlier on, like they were interested in doing a securitization type of asset buyout kind of transactions, especially the private side. PSU banks were very, kind of staying away from the NBFC sector in general, unless you are probably very large. But it's been starting to open up in the last couple of months. Let's see.
Okay. And what will be the cost of borrowing for the new fund that you have got, the new bank line that you would have got?
So the interest rates would be like sub 11, so 10 point some percent. Overall cost would work out to be somewhere around the neighborhood of 12.5-13% after adding in cash collaterals and processing fees and all of that other stuff that they put in. And stuff. Certainly not cheap by any standards, but you have the published rate and you have the IRR rate. So we always calculate on an IRR rate, putting in every kind of all the combination and permutations that people put in the sanction letter.
Okay. Thank you so much, and wish you all the best for fundraising. Thank you so much.
Thank you. The next question is from the line of Srinath V from Bellwether Capital Private Limited. Please go ahead.
Hi, Alok. Just wanted to get a better understanding of the rural two-wheeler product and, what's the kind of target market, how does the client sourcing model work, and how has the credit experience been? And currently in the presentation, is getting clubbed with the MSME or with the two-wheeler business?
Yeah, so I'm going to add one more layer of confusion. So the MSME or the two-wheeler pilot has been kind of split into two. One part is happening through our MSME division, which are mostly direct sales. So through referrals or not by DSAs or anything like that, through our own field officers sourcing at the field level. So that portfolio is approximately 6.5-7 crores currently. And then there is a separate two-wheeler, two branches that we have opened. That is like a very young pilot to begin with. That is through our existing two-wheeler division, which is working with sub-dealers. So it's kind of like a similar model that we have in our, urban two-wheeler market. However, the difference is that we are trying to target sub-dealers or locations which don't have a lot of competition, and the customers would be, it would be a cash collection. We are trying to combine the best factors what we feel in MSME and microfinance. And we strongly believe that one of the reasons why we get a lower NPA in our, our microfinance and especially MSME division is this concept of the doorstep collection, of building that relationship and the rapport with the customers. So far, you have both of those pilots running. Because of the increased network that we have in our MSME branches, that portfolio is growing slightly faster. In the two branches that we have opened in our, specifically for rural two-wheeler, the asset quality is performing fantastically, but the sales are a little bit slow right now. I don't think that has to do with the model. I just think that's the macroeconomics that are going on surrounding two-wheeler sales to begin with right now. So we'll see. Let's see what happens there.
And how's the PAR 30 performance in this kind of a book? As in, because you are doing cash collection, is it mirroring our MSME business? Is that a fair?
Yeah. So in the exclusive two-wheeler branches, we don't have a single overdue yet, but we only have about 350 odd customers. And in the MSME side, where we have about 7 crores, I think the PAR 30 figure is what?
About 2,300 customers, the PAR 30 would be less than 15-20 cases.
Yeah, about 20 cases overall would be PAR 30.
Okay. And at what point would you be looking to kind of scale this particular model, or do you have time horizon in mind, or would you like to kind of see credit experience for another 1 year, or how do you see this model kind of scaling over the next couple of years, very broadly?
No, we are definitely interested to scale it. There's no, yes, there is you want to see the bottom before you commit yourself too strongly. So we have not been through that one cycle yet. We've seen the top, but we have not seen the complete bottom. Like, for example, demonetization in microfinance was the complete bottom, right? That's where you felt, okay, this is the worst that could have happened, and we have not seen that in the MSME in the new segment. So we are growing cautiously, but the growth is very.
Yeah, Alok, we are bullish on the cash collection from their
doorsteps.
From their doorsteps, yes, and I think that is the way we want to go, because we are also into two-wheeler, and you can see the difference in both the sort of semi-verticals. When you take PDCs or when you take Notch or when you take ECS or something, and on the other side, when my person goes and visits their household to collect the money, you see that the customers are under pressure and the default ratios are much less. And I guess that's the future that we want to follow, is the household collection.
Yeah, so people are talking about fintech. We are talking about taking a step back and doing cash collections, right? So I know it sounds counterintuitive, but it works for us, and it works for us really well.
Thanks, Alok, and fantastic set of numbers. Congratulations, team.
Thank you.
Thank you. The next question is on the line of Parth Sangvi from MK Global. Please go ahead.
Hello.
Hi, Parth.
Hi, Alok. So just one thing I wanted to know is that what's your current customer base and how do you all plan to, grow it going forward? Like which geographies will you all be targeting?
So right now we are in microfinance. We are in 6 states. Most of the portfolio is in 4 of them. Rajasthan we just opened. So that's a very young portfolio. I think the portfolio there will be just 4% odd. We have about 30% in Gujarat, 25 each in probably 25 in
about 21 and each in UP, MP and Maharashtra.
Yeah,
I mean,
MP will be higher. MP will be 25. Approximate numbers here. So Rajasthan is going to be in at least the next 12 to 18 months is going to provide larger growth. Uttarakhand we have a few branches. We have no plans to grow there. The question is that when do we consider going from 6 states to 7? And we have not decided on that yet. I mean, we'll consider it when the time comes. Of where we want to focus, but there is plenty of areas to expand in the current park.
Within these states.
So in Gujarat we have pretty much opened most of the branches that we wanted to. But MP, Maharashtra we have barely scratched the surface. UP we are like in a few areas in eastern and then some in the western, I guess northwestern side. But there is UP is a huge state, as you know. And even MP, we've covered only about half the areas that we want to cover there, half to about 2/3 at the most.
Right.
So there are plenty of areas to expand in the existing states that we're already in.
Got it. And just one more thing. Are you all allowed to do cash collections from MFI customers as per RBI?
Are we allowed to do cash?
I mean, is it only? Is it not allowed unless you have overdues or something? Is there like any regulation on this?
No, there's no regulation. I think I know at least 99.9% of microfinance companies are following a cash collection methodology.
Okay.
In the MSME also there is no regulation surrounding it. You can do a cash collection.
No, but from home, like can you all visit the customer's house to do it?
Yeah, of course. There is some regulation that you cannot go past a certain time.
Okay.
It's the NBFC MFI guidelines for overdue collection.
But here the timing is given to a customer that somebody from us will be there at let's say 10:30 in the morning, and that is being followed month after month.
Right.
Okay, got it. That's it. Thank you. Yeah.
Thank you.
The next question is from the line of Amit Mandal from 2.2 Capital. Please go ahead.
Yeah, hi, Alok. Congratulations to the entire team on a good financial performance.
Hi, Amit.
Yes, a question on just the MSME side. So we've added 9 branches, so that's a substantial growth in the number of branches. So now are you looking to become more aggressive on the growth front on the MSME? Just because the branch number, we've gone from 26 to 34 in this one quarter alone.
Yeah, so we are done with opening branches for the year. The thing is, earlier on our branch openings were always staggered. For the last 2 to 3 years, we kind of done a better job of getting it done because it's a constant distraction of opening branches. So we try to plan ourselves. Like for example, we have already started planning for next year's expansion. How many people you need in the pipeline and how many promotions you need in the pipeline and which areas and all of that. So no, I don't think aggressive is the right word here. I think just following the plan that we set out at the start of the year. That said, I have not thought too much about, I have some thoughts, but I don't think I'm ready to disclose what my plan is for next year or anything like that. It will be a 40 to 50% growth, but most likely more than that. So let's see. At least in the MS.
Okay. And are you now having customers in the MSME segment who are in the second or third cycle?
Yeah. We already have customers in the second and third cycle, or not the second cycle. I'm sorry, I don't have the exact figures of how many. It's not a substantial amount, but it will be 3-4%.
Falling into second cycle, yes.
So a lot of people do pre and stuff like that. So, but yeah, that's been coming in.
So it will be insignificant as of now, less than 5%, say.
Yeah, under 5%. Under 5%.
Okay. And you mentioned
part is that these numbers keep on increasing because they are mapped to the kind of disbursements that have happened in 17-18. So that's something which keeps on increasing over a period of time.
And in this also, would you go with higher ticket size or lower interest rates in the second or third cycle? Because now I think this number will keep increasing. You'll have more and more customers whom you have already lent to, have seen the experience.
The thing is, Amit, first of all, as far as the loan size goes, we do a complete secondary evaluation for them. What we can do in the second cycle is that whatever net positive cash flows are there, in the first cycle we take only 40% or in some areas 50% of their net positive cash flows. In this case, we can increase it by 10%. So if that generates an ability to borrow a larger amount and if the customer demands it, we are happy to do that. But it won't be automatic. You paid back one loan, so here's 20 grand more or 50,000 more or something like that.
Okay. And because a lot of your there's a higher degree of cash collection that happens even in the MSME segment. So how do you manage risk of fraud, be it on the customer side or on the your employee side? How are you managing those risks?
Well, that's why we are all sitting here. That's the hard part of this business, is managing the logistics on the ground and managing the operations. So it's a very operational intensive business. We have lots of checks and balances with lots of layers, almost like a casino to an extent where everybody has to watch everybody else. And we have daily reporting structures that if something does go wrong, we know about it the same day. Even still, you cannot prevent somebody who has 50,000-60,000 in his pocket from running away. So that does tend to happen from now and then. But it's not a very large amount, and we have insurances to cover even those kinds of small thefts or whatever you call it. But our systems, touch wood, our systems are set up in a way where we don't typically run into very large-scale frauds or anything like that.
The issue here is how to keep your employees happy and ticking, You try to give them loan the issue is every human being has a weak moment in his life. If you can take care of him during his weak moments, you got it. This is what we do. So we give them ESOPs and we give them medical loans and we give them a medical insurance, and whenever they need money, the money is on tap. So you try to minimize those things, and you try to keep them sort of a one family member and things like that. The things are going to happen, yes, I agree with you, but you try to minimize it as much as you can,
Got it.
Also, we have significant money and time in our microfinance side for this new ERP system, which will bring everything in almost fintech-ish to a certain extent, where everything is mobile-based and you get real-time data and analytics and stuff on the field. Even going to tracking every single one of our, geotagging every single one of our customers. And we are implementing something very similar for our MSME division from April 1st of next year. So that plan is already in the works. So, of course, a lot on technology and software to also help control things. But there's no one factor. I think it's a combination of a lot of things. that helps us control.
Okay. No, thank you very much, and again, congratulations and good luck for the future.
Thank you.
Thank you. The next question is on the line of Jignesh Shah from Emkay Global. Please go ahead.
Hey, hi, Alok. Thanks for the opportunity. Just a bit of a confusion on what Parth has been asking you. So, in our MFI model, we follow the center visits and all, right? Or we don't have that concept right now?
No, we do have that concept. I mean, the money is collected at the center meetings.
At the center meetings, right?
Correct.
Yeah, so there will be a weekly, how the collection happens? Is it weekly, bi-weekly or monthly? How do we do it?
So we have a small portfolio as a fortnightly, basically, every 14 days. But majority of our portfolio is monthly. We collect from the 1st to the 12th of every month.
Okay. So the customer gathers at a place, and then the team leader will collect the money and hand it over to your person. That is the same process that the normal MFI you follow? Similar
process. I mean, there are group leaders and center leaders.
Yeah.
But as far as, we've tweaked the system a little bit. It's not important. But yes, very similar, where there's, our average center size is actually smaller than a lot of the other MFIs.
Okay.
We only have about 7 or 8 different, or our center size is only 7 to 8 customers on average, because it is, a static center model. So
Understood.
Once the center is formed, no new people can come in.
Understood. Now, since we're discussing this, I had a word with Spandana and this guys also. There are banks who are following a model whereby they give it on a limit basis sort of lending, right? Immediately they allocate individual assessment has been done, and the limit has been allocated to a borrower, which is much larger, say 80,000, 1 lakh rupees and all. So are you seeing this being a spoiler in the markets in general? You have been in and out in MFI, had seen the cycle now completely. Do you think this is a spoiler, or you think this is the model that gradually all MFIs would be following it up and all? Just your views over this.
I'll give you my opinion. It
Sure.
will be wrong.
Yeah, sure.
My opinion is that when people say that we are assessing a customer in the microfinance side, my first question is how, So the level of underwriting which we do in MSME is what would be required to do in the microfinance side to practically assess that how much money he or she would be good for.
Okay.
So I think what you're trying to say is that some of the MFIs are saying that that we assess the customer, quote unquote, for 60,000, so we start him off with 30, and then in 6 months we give 20.
Yes.
We don't do that's a top-off loan.
Yeah.
Right? That's the fancy way of calling it top-off loan. So I don't believe in top-off loans.
Yeah.
I think that it leads to certain level of discipline as far as evergreening and stuff goes.
Sounds great, yeah.
I might change that view. I'm open to change my
that.
But for now, I don't think it's a good idea.
Perfect. That's what I was expecting from you. And
sorry to interrupt, Mr. Shah.
Yeah.
Sir, may we request that you return to the question?
Sure. Thanks, Alok. Thanks for this, man.
Thank
you. No problem.
Yeah.
Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference, kindly limit your questions to one per participant only.
Sure, we can extend it a little bit as well, operator, so we get everybody's questions.
Thank you. The next question is on the line of Anand Jain, an individual investor. Please go ahead.
Thanks for the opportunity and congratulations on a great set of results. So my question is mainly around at what level of debt equity are we comfortable, and what capital that are we looking to raise? Like, I was looking to raise more equity capital from here on, and what would be our burn?
You are referring to our recent board announcement?
Yes.
Yeah, so there is a potential to do true sales and offload some of our book, off book to a certain extent. and there is certain level of sub-debt also that we have. So that being said, we are probably comfortable at around a 20% CAR ratio on a consolidated basis, if you want our policy on that. And so, given our growth trajectory, we are, we have created a provision to raise funds. There is no immediate need of it, but definitely by Q1 of next year, if we continue this growth trajectory, we'll probably need it. So, but if we raise matter depends on a lot of factors. So let's see how that goes.
So at 150 crore equity, which capital right now, and around 750 crore book that we have right now, we're pretty much at 20% CAR, right?
Yeah, that's correct.
So we are in some ways we are like in a, unless we offload some part of the book, we are in kind of an urgent need to raise funds, going by what we have, what we have stipulated.
4.75 to 1.
Yeah, 4.75 to 1. So yeah, we are getting close, but remember, we are adding about 12 odd crores in equity every quarter. So if you 5x that, so then your portfolio can keep increasing. So if your ROEs are at 30%, then you can comfortably keep growing at 30% without even diluting.
Totally agree, right? But we are going faster than that. So.
Correct.
If I add one more point here. One is, there is always enough room for raising sub-debt here. If in a short term, if that becomes an issue, because on a sub-debt front, we have a very minimalistic kind of a sub-debt of only 15 crores on our books. So that route is available. Having said that, on a debt equity of 4.75, we continue to maintain have a better CRAR just because of the a better situation on the tier 2 capital as well.
Yeah, so I think there is tier 2 about what 20 crores.
20 crores of tier 2
on the books as well. So that increases the CAR by another to about 20 odd crores.
Thank you. That was appreciated.
Thank you. The next question is from the line of Pallavi Deshpande from Samiksha Capital. Please go ahead.
Yes, sir. Thank you for this opportunity again. Hi again. I just wanted some data keeping numbers in terms of would it be possible to share your attrition rate at the microfinance employee level and also attendance percentage for the center meetings?
So I'll tell you what we see as far as the attrition rate on microfinance last year. Discounting the first month after they join, it's about 18 to 20% in the microfinance side.
Right.
As far as center attendance goes, honestly, it's about 65. It depends on state to state. So,
right.
But between 65 to 70%.
But Akash, why don't you tell Pallavi that we are very strict as far as the presence is concerned. At the second cycle, we take a note of her presence during these center meetings.
Correct. So, but the JLG has been changing in the last few years, and the attendance in the industry as a whole has been going down, which is something that not only concerns me, but it concerns practically every practitioner. We are trying to make moves to improve that as well, but let's see.
Right. And so does the CRL which you spoke about, does it, speak of some levels for this, the code of responsible lending, which you spoke about earlier?
No, it doesn't talk about customer attendance in that.
Right. And would it be talking about the number of lenders per borrower? What is the focus? I just wanted to understand that.
So the CRL is basically trying to bring everybody in the level playing field. So earlier on when the NBFC MFI guidelines were created by the Malegaon committee, in 2011 and subsequently into the NBFC MFI guidelines in 2012 by the RBI. That was the time where 99% of microfinance portfolio in India was run by the NBFC MFIs. And now, because of the SFB structures where a lot of the larger MFIs moved on to SFBs, and then you have one large bank also, Bandhan, which is in MFI, that share is going down. And so the idea is that the two NBFC MFI rules or three lenders holistically with a total cap of earlier it was 1 lakh, now that RBI increased it is 1.25 lakhs holistically. So no matter what the institution is, you will not cross that 1.25 lakh loan and call it a micro loan. If you want to do it, then you can do it under with more underwriting or something like that. That's the primary purpose of it all.
Okay. So, but then the target for the CRL would be only the NBFC MFI. Is that right?
No. As of today, most of the SFBs have signed it.
Okay.
Most of the NBFC MFIs have signed it. The NGOs are there. There are other larger NBFCs which are doing, which is, this is a little complicated and I don't think we are running out of time. But there are larger NBFCs which are not MFIs also who are doing it to us, like L&T or Fullerton. Banks are also doing it under BC. So you're trying to, even like, Yes Bank and ICICI Bank have signed. The only one outlier is Bandhan, which has not yet signed. I guess I'm only sharing it because it's public knowledge that they have not signed. It's been in the newspaper as well. So that is the only significant outlier right now. Otherwise, most people have signed.
Right. And so would you be concerned about the increasing ticket size versus, the number of borrowers for the industry as a whole, that trend that we have been seeing for the last year?
It's only in pockets. I think if you look at it overall since we started in 2009 until right now, it's only a marginal increase if you remove inflation from that. So, like we started our loan size as 10,000, now we are at 27,000. That's a period of 10 years though, right? So you got to account for inflation. So overall, the ticket size increase for us in the past 5 to 6 years, I believe, has only been a CAGR of about 14%. So not a very large increase. A lot of it can go towards, and you got to account for the so this is all cycles, right? It's not just the first cycle. So it's all cycles. So as your customers keep maturing, the idea is you give them more and more loans.
Right, sir. Right. Thank you, sir.
Great.
Thank you.
Was that the last caller?
Sir, we have one more question. That is from the line of Amit Mantri from 2.2 Capital.
Okay. All right. Last question.
Sure, sir.
Yeah, hi, Alok Sabi here. I just wanted to confirm, you said your monthly collection, 85% of your portfolio is monthly collected, right?
Yeah, slightly more now. More than that now.
But your presentation on page number 28 says that 15% is monthly collected and 85% is fortnightly collected. So is that...
It might be a typo.
Okay.
It might be a typo. I'll correct that.
Okay.
I'm sorry about that. What page did you say?
Page number 28.
It might be transposed or something. It's like that sometimes.
Okay. And secondly, this SME, MSME loan book, now you are making whatever 33-35% yield on. So I'm assuming the customer is making some 100% kind of ROE on the money that he's utilizing. Now, in the case of microfinance, of course, people say that it's for income generating loans, but everyone knows that it's more for consumption mostly. But in the case of MSME, I'm assuming it is because you're doing such a strict writing, it is for income generating. So now, once the guy has taken a loan from you and he's obviously expanded his capacity substantially, and his income has increased substantially because he is making a lot of money on that investment. So after having paid the money back to you, why would he come again? Again, I mean, is he further expanding his capacity? Because end of the day,
might not come back again. He might not come back again, or he might come back to me like a year later. So there is no like rule in MSME.
Okay, so the renewal rate in MSME is not as high as it is in microfinance. I mean, you have very little data.
I don't have the exact numbers for you. I can pull them out because it's such a small size right now, right? We just crossed that 2-year kind of a barrier. But no, I mean, there is nothing necessitating them to borrow further. But to answer your first question about the income generating side and things, see, in the micro level, and I say this a lot, see, it's not like they are running, I mean, if you think about it, they are running sole proprietorships, right? There is no differentiation between their household expense and their business expenses.
Right.
So if they have to pay a hospital bill, it's going to come out of the same pocket. They don't have separate pockets for their business, and they don't have a separate pocket for their household. So to a large extent, and after doing this for a long time, I mean, we make sure it goes towards the business, but if somebody is buying money for inventory in their Kirana store or something, it's very hard to see whether that money is actually gone. I'm mostly concerned about discretionary spending, right? Because aise chahiye ghar ke liye, so it has to come out from somewhere. So that's one part. The second part is what you said about I think the basic, if I can underline that question, is you are saying that what business are they running where they can afford to pay me 25-30%?
No, so I don't understand that. I mean, you can definitely do that. You can make 100% ROE, but it cannot be scaled. So when he's coming for second cycle, third cycle, that would worry me because, a single person cannot manage, say, 5 machines, but then he'll have to start hire employees, and then his incremental ROE will go down substantially. But obviously you don't have data points. You're just 2-year-old business, so that was my.
Sure. Yeah, I don't have a lot of data points right now. Hopefully, and see, the thing is, microfinance, there is a lot of data available from a lot of different sources, right? In MSME, especially MSME, there'll be a lot of data, but not this. What I'm doing is not really MSME. It's something different.
Right.
So data available, and it's hard to split between your model and somebody else's model because there are so many different kinds out there.
Right. Hey, have you seen what Vistar does? Is it similar to what they're doing? Vistar?
They are doing sizes, and I think they are doing a lot of secured stuff as well.
Okay.
And if they do doorstep collections either, although a lot of them, they have to do doorstep because of the bounce rate being high.
Right.
But it's very similar. The ticket sizes are different.
Okay. Great. Thanks a lot for answering questions.
Sure. No problem.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for the closing comments.
Yeah, I'm sorry, I wasn't expecting to say closing comments, but thank you everybody for joining us, and hope everybody has a good evening and a good week ahead, and we'll see you next quarter, I guess. Thanks a lot, and take care. Anything from you?
No, I don't have nothing much to say except what was that? हमारे अरमान तो आपके ऊपर है.
Yeah, that's true.
I'm speaking on behalf of Arman Financials, and हमारे अरमान आपके ऊपर है. Thank you so much, guys.
Thanks, everyone. Bye.
Thank you.